Thank you for all the kind comments on yesterday's video. The support of my viewership helps a lot. Yesterday I was just really at my wit's end, and the encouragement helped. So the result has been a very profitable trading day for me. So thank you. Let me talk about the daily chart first. You can see I have it pulled up with the Ichimoku cloud, and the price rose, touched the conversion line just about almost right there, and then boom, turned around, reversed, and closed below 1722. And this is a big deal. This is a very big deal. I'm going to turn off the Ichimoku cloud really quickly, and I'll get into explaining what I'm looking at. So just bloop, bloop, take that off. Okay, what's this yellow line? This is a flagpole. I mean, really, I was looking for a double bottom in here. I was doing that analysis just hypothetically, and I said I wasn't comfortable talking about like a double bottom. What I'm really looking at is a big old bear flag. And I'm just going to re-illustrate that really quickly. The flagpole, of course, is huge, and I like to draw flags in this blue trend line thing here, like this. Beautiful. Isn't that beautiful? If you take the wicks, that's what you get, right? This is very close to confirming that bear flag. Very close. Super close. It's so close that I want to tighten that range up and make it a confirmation. Why can't that work? Look at that close. Did this close outside the bear flag? If I use that first candle for the height of the flag, I mean, yeah, it did. And given that the price hasn't closed below this level since closed above, closed below, you know, this is like, that's a month ago, March 21st. The price is reaching a very critical level, and I don't really see a whole lot of support until we get down to this pink zone near $15. And what's super bearish about this is actually a hammer. It's an inverted hammer. Let me pull it up here. So I have Bulkowski's webpage here on the right side. I'm gonna blow it up. Can I grab it? Can I please? Thank you. There we are. Okay, let's look for H. Is it E, F, G, H, I, J, K? Where? Here we go. Hammer inverted. Okay, let's talk about this. Let's talk about this. Can I even blow this up a little bit? That'd be nice. No? Maybe I can? I think it's working. Yeah. Okay. Theoretical performance, bullish reversal. Bearish continuation, 65% of the time. Ooh. Bulkowski says it's gonna go down. So the inverted hammer candlestick. I'm gonna go ahead and read this blurb by Bulkowski. He says the inverted hammer is a two-line candle. The first one is tall and black, followed by a short candle. Well, let's find the tall and black candle. There it is right here. And he says black because before color printers, the red candles were black and green candles were white. Just black and white printing. So here we have a tall black candle, which is true. It could be taller. It'd be nicer if it was this candle or maybe this candle. These are taller candles. And then he says a shorter candle, and this isn't quite short. It's still pretty tall given that it's about the same height as the candle previous, but it's a pretty good fit. He says the inverted hammer is supposed to act as bullish reversal, and that makes sense from the picture. It looks as if a downward momentum is slowing. However, for an upward breakout to occur, confirming reversal of the existing price trend, price has to close above the top of the candle pattern, and that is more rare than a downward breakout. Thus, this candle acts as bearish continuation. And that is what Bulkowski was also saying about the bullish doji, which is on the weekly chart. He said that the downside is easier than establishing a reversal. And that's going to be true here. To break this candlestick pattern, the price is going to need to close above 1866. And that has been an incredibly strong level of resistance. And it's just not likely to happen. It's not as likely as a continuation. He says that you should look for a tall black candle with a close near the day's low, which was true, followed by a short candle with a tall upper shadow. And I guess the candle is short. He's talking about this height here, just the body. And that is short. That is shorter compared to this candle. And that is a long wick, or, you know, topping tail, however you want to describe that shadow. It's long. It's about as long as the body is. The second candle cannot be a doji. Opening and closing prices cannot be within pennies of each other. Oh, I'm sorry. He was talking about the first candle. near the day's low, followed by a short candle with a tall upper shadow. Okay, yeah, no, this is correct. And he says that the second candle can't be a doji. All right, I'm good. And it's not really a doji, right? Looks good, because we're talking about hammers. Yeah. Okay. And the open on the second candle must be below the prior candle's close. Ooh, we didn't meet that criteria, did we? So we had a low of 1730 and an open of, what was it, 1741. Not quite. Not quite a hammer there. Nonetheless, it does have a pretty good resemblance, does it not? So maybe we don't necessarily look at the candlestick pattern for our answers. We can use our chart patterns instead. And this does look like a big pennant, and that does look like a breakout of that pennant. It really does. I'm going to use the first candle and that second candle here for my touch points, say that this was just a little overextension and it did lead to a little rally. I think that this close today confirmed this bearish flag, and it is so bearish. This is an extension of a V-top. And I believe we're about to see the continuation of that V-top all the way to the bottom of the beginning of the run, which was really back here at 1290. So a dump to 1290 I think is incoming. And the biggest tell is going to be whether or not we can get through this $15 level first. If 15 goes, 1290 is on its way. I think we're already going to go that low. I think that's what today's close signals. And I'm going to be looking for that. I'm going to zoom in now to the 1 minute chart and pull up what my day trading drawings look like. They were all over the place, so I'm going to zoom in and we'll take it really slow. Really slow. And I'm going to actually delete some of these things right now, the Fibonacci retracements I was using. So what we had yesterday was an uptrend that broke and a slide down, and then this, well, it's like a double bottom, right? And the price did rise initially, and as soon as we encountered this downtrend, this red dashed line, which was established from the last few days, let me show that actually. It's gonna look bad because all these drawings are on here, right? So I'm gonna need to zoom in a little bit. After I fix my chart, I have to pretend to draw something and then it will zoom. Come on, TD Ameritrade needs to work on some stuff. We'll just put a circle out here, and then it'll let me zoom in. I don't know why it's like that. So yesterday, that was 421. Today's 21. So what was this downtrend? Where did this come from? What was I looking at? I was looking at this downtrend here. See how confusing it is? When your charts get really messy, it's like, this is incomprehensible, right? This is why I have so many different charts, so I have to look at everything all at once. But you can see that this downsloping trend line, it started back here on the 19th. And so we had, on the 15-minute chart, we had these really clean pipes. Let me talk about pipes. What are pipes? These are pipes. I mean, almost a pipe. Maybe on a larger time frame, maybe 30 minutes, that's a pipe. But basically what happens is the price pierces through a level, and then it just turns right around and goes right back down. And it's like, whoops, sorry, and it comes down, and then if the price closes below the pattern, then the dump ensues. And that's what happened, right? So we had this run up in the morning to that level, and it looked as if the price was, I'm on the wrong time frame, finding the right time frame. Okay, I'm sorry, this is all over the place, but I want to edit this. I hate editing so much. Okay, so the price ran up, hit that downward pressure, pushed through it, found resistance initially at that uptrend, came up, topped out, fell, and it was like, oh my god, that's a topping pattern. That is beautiful. If I had to call it something, I'd say a head and shoulder top, but I mean, it's not really a pattern because it's just an intraday thing. Nonetheless, I entered into 12 1350 puts on this candle, the second minute of the day. I was like, go puts, deep out of the money puts. This is it. If it doesn't break down today, then I'm just like, whatever. Like, I don't need to be doing this. I don't need to lose any more money. And then the price kept rising, and I saw this topping out occur. I mean, look at this bearish divergence in the RSI. Bearish divergence is where you have these descending peaks in the RSI as the price has rising peaks. So right there, you see that it comes out from overbought, comes back up into overbought, Meanwhile, the price is setting new highs, so those lines are against each other. That's divergence. Boom, I entered into 3 more of those 1350 puts right up there for $1 less, and that was great. I had $15, and I was just thinking to myself, like, you know, just throw them in there. And then the price just started to tank, and it started with this single downtrend here, and this reestablished this intra-week downtrend, and the price came up, tested it, pushed down, and then these green lines here, these are corrective waves and these measured moves down. And I say measured moves down because that's exactly what I saw. From this low, from where that corrective phase starts, I take a retracement measurement first, right? So I go to the high, to the low, and right here at 61.8%, you can see perfect little touch. And then goof, kaboof. And that uptrend broke right there. And I said, this is a great measured move down. And this is our first leg, our corrective phase, and our third wave. You can see that here. And today I was thinking this is double trouble, like Jesse and James from, well, Pokemon, you know, Team Rocket. So price falls, and then we have a corrective phase break again here, and then some support along the 1710 level. And then I saw a tilted flag. Look at this, perfect. Descending peaks, descending valleys, fits within a channel, and comes off of a flagpole, right? And that is incredibly bearish. And I was really happy to see that here, because this downtrend that started from the peak and connected this trend intersected that at the time. And so to see this gave me hope that this trend wasn't over yet. I can generally spot reversals by how close the price is getting to the trend line, and then whether or not the price makes another move lower, or whether or not the price moves up and over that line. And here it went lower and it broke down, and then we had a big corrective phase. But this was a huge dump, measured move down. You see that? 1, 2, and then 3. And that's all part of a bigger measured move down. 1, 2, and then 3. And I could show those, but we're just gonna move on. And then we have this big corrective phase, and this is the exciting part. Is I'm pretty sure this is a big retracement in another measured move down as well. So I'm just gonna take that, pull it up to the top right there, and let's see if we reached a significant level on the fibs. You need to get to at least 70% to get that measured move down. And here we had, right at the 61.8 retracement, a turn down. So that looks like a measured move down. And the price did break down below that corrective phase, come up and test it and close lower. Ooh, that means that it broke. It broke. The price ended in a downtrend, and it looks like we're going to get a second leg. Theoretically, in a perfect world, the second leg is going to be the same height as the first. And that price target is going to be nasty low. Nasty low. 1560. If this pattern finishes playing out, the price is going to drop into the 15s. That's pretty close to that level of support and resistance I'm looking for. The price is indicating, I believe, at this time, a plunge lower. And that's a big deal. Because if you look at the weekly candle, which we will, a close lower is going to confirm some pretty bearish things as well. So I did take profits on some of those puts, not all of them, on 7 of them down here. And I sold them for $9 a pop. So I bought them for like $5 or $4, and then I sold them for $9. That's a huge gain, like percentage-wise, you know, like doubling. And that's what deep out of the money puts can do. If you know what you're doing. I got lucky. I chose the $13, well, I didn't get lucky. I suspected a breakout. I mean, watched yesterday's video. As soon as I saw that the bear flag was set up with a tall green and then a tall red candle just right away, I said, geez, that's a reversal. And it's got to break down. It's gonna dump today, and it did dump today. And so I bought the put that I thought was most appropriate, which is just one strike above the target for the pattern for the V-top. So I bought the 1350. There was some funny stuff too going on with the pricing of puts this morning. I don't think I saved a picture, but I think I put it in my Discord. Oh, here's my Discord. So let me pull that down. Anyway, yeah. So that was today. Big dump down. I bought puts. It went great. And I think we're going to see some more downside coming in tomorrow. Looking at the weekly chart really quickly, let's turn on my big chart drawing. My big drawings, this one. Okay, so what do we got going on here? What's cooking? Bearish reversal candle here, bearish continuation candle here, supposed bullish candle, right? But actually bearish continuation, and that is exactly it. The RSI is now falling down below 50, right? 42, heading down, gaining speed on the weekly time frame. Volume's still pretty low. Implied volatility is not rising yet on the weekly. But if I go out to the daily, this is where I get really excited. Look at this tick up in implied volatility. So from yesterday, we had an implied volatility of 124, and then today we saw that rise to 129. So we had a 5% rise in implied volatility on a red candle. On a red candle. Why is that exciting? Let me zoom out again and zoom back in. Because I'm playing puts, and I'm looking for another instance of measured move down. This measured move down was the first leg in the biggest measured move down, and I believe that we're going to see a similar pattern finish. So here you have a corrective phase where the price makes this rally, this V reversal. It's kind of like almost like a V bottom, and then it extends and dumps. This rise here, I believe, is similar to this rise here, and that it will be followed by another dump. Except it's going to be a big dump, and this looks like a good start to that. Looks like a really good start to that. The apex of that big triangle did correctly indicate where that trend reversal was going to occur that led to the V top. And anyway, what I wanted to show is that during this time when the price was falling, look what implied volatility did. Implied volatility rose, and I was hoping to see it continue to rise, and it didn't. And then it started dropping, and that was confusing because, well, it was still not great, but the price was moving sideways, and that kills implied volatility. This is where the implied volatility stopped rising a lot and just kind of took a chill pill, but it's still generally in an uptrend, right, as that price is falling. So back here where we had the big dump of these big candles, this is where implied volatility rose the most. I'm hoping to get another instance of this, of rising implied volatility in a downtrend. You can see the implied volatility came up to a similar high on the run up, okay, and it came just to the very tip, the same level of the apex, that bottom level support in that big triangle, descending triangle. And this is the descending triangle where I get that $7 or $11 price target. I haven't really checked it. It's one of the two. I'm pretty sure it's 7. And while I have this zoomed in on the daily, you can see the Elliott wave analysis is really clear here too. 1, 2, 3, 1, 2. Let's see here. C wave, D wave, E, and then the dump. And down the price goes. So we're seeing a rise in implied volatility. You can see it right there. And this is a huge cue for me. This is a huge cue for me. This is why the price of my deep out of the money puts doubled, is because that indicator went up a lot. Like 5% is quite a bit. It went up too over here, and this, let's see here, between these two candles, and I got really excited here too. And then the implied volatility dropped on a price rise, and it dropped again, of course, when the price just retraced its steps from the day prior. But this is a pivot, I think, to see it rise, fall, and rise. I think this is the cue. This is the signal that I've been waiting for. Rising implied volatility, falling price. This looks good. Price came down, bounced, boom. Here it comes, the big dive. Or, as I've been calling it, the Great Dippening. Obi-Wan reminded me of that today, the Great Dippening. So yeah, I think I covered everything I wanted to say today. I'm still holding on to some puts, and if the downtrend continues like I think it will, which will be in a vertical run down style, I'm gonna do very well. So I hope you enjoyed the video, and stay tuned because it's gonna get spicy.